Do you see carbon markets becoming more joined up? At the moment, we've got a very segregated approach where you've got an EU ETS. I'm talking about compliance sector here, but EU ETS, a UK ETS. There's some different states in the US, I think, have their own, and there's some nascent projects in, I think, Korea and New Zealand and a few others. Do you see that rolling out and becoming a globally adopted emission trading scheme?
I don't. No, I think the context is that these markets need to stay within their jurisdictions. So the governments involved, whether they could be the EU market or a more localized market, have to understand their local conditions and put in place a carbon credit market for those local conditions. I think if you create a benchmark, if you create a fungible price, it will adopt the characteristics of the cheapest thing to put in to that basket. And once the cheapest thing is gone, it'll just go to the next cheapest thing. So if you created a huge global fungible market, then it will distort where the capital goes. The capital will always just rush to the cheapest thing to do, and then as you build up to the slightly more expensive things to do. So to break it out by region will mean that we move faster as a society to reduce our emissions.
One of the things is almost so would that also apply to the voluntary carbon market? You would prefer a segregated market as well on that, and a project by project approach rather than a more, I would have thought, as a brokerage, a benchmark contract makes your lives easier.
It might make it easier, but I don't think it serves the mission.
Right.
I would, as a former investment banker, I'll describe the voluntary carbon market as a bit like the corporate bond market. And you don't have corporate bond futures because the only thing that would ever get delivered is the cheapest one. In the voluntary carbon market, there are sustainable development goals. There are attached to each credit. There is so much rich and important detail on each project that they don't lend themselves, in my opinion, to being treated as a fungible block.
So you would be resistant to those markets going down the exchange route. You prefer them to be bespoke OTC products?
But there is a place for the exchange futures that exist, and probably more that will come. There's definitely a place for that, especially for hedging purposes. But for an individual company that's looking for a path to carbon neutrality, that matches their values, their goals, that is not something that is a fungible credit. That's something that they have to spend some time on and analyze.
And I think you can see that I've spent some time looking through different sustainability reports and and you get a very clear sense very early on how committed that party is to the project, whether it's just some nice words to keep the investors happy, or whether it's something they actually commit to. It does actually become pretty transparent pretty early on as to whether where their level of commitment is. And of course, I had a look at your sustainability report earlier as well. I'm glad to see you've got numerous different levels. You pegged out your B Corp. You've got some clear guidance on some target setting on diversity and inclusion, and of course you are you're carbon neutral if you include offsetting since last year, right?
Yeah.
So practicing what you preach.
Yes. You mentioned that we were a B Corp. That was a tremendous exercise to go through that pulled a lot of people in the company together to document how we behave and what we do and our values, and feel proud of how we do what we do.